Hey everybody, it is Mark Coe for Monday, October 9th. Bit of a slower day in the market. We wanted to take a look at our levels from Friday, see how that played into Monday. So Friday I did a video and I was talking about this reversal reaction where you saw the dollar take a leg lower and pointed out those levels. And what I've been focused on is euro dollar, this large chunk of support between 1670 and 1720. And just for frame of reference, so everybody knows what I'm talking about, I realize not everybody watches my video on a daily basis, but I do want to give you some background of what I'm looking at. So this level has been in play since late July into August, again in October, right? That's the level I'm focused on. It's 50 ticks wide, 1670s to 1720s. So on Friday, after non-farm, we see this reaction, rejection of lower lows, a rejection of that movement below the 1670. So today, coming in, I'll just look at my analysis for today, and it was support at 1690, resistance at 1790. We've traded well within that. So it's been a range-bound day, range-bound Monday. Nothing wrong with that. But if you see what levels are holding, where it's getting its short-term support, you're coming in off the reaction again on Friday. And this is what's so great about the levels trading. Again, it should be pretty visually easy to spot the points where the market is willing to take the market higher, take it lower, but it becomes a reaction to that level. That's what's important. And so doing the top-down analysis, the bigger picture look, gives you the idea, the focus of where you want to be looking. Where people, especially retail, a lot of the retail shorter term audience, they'll tend to take such small little micro levels and apply big meaning to them. But in reality, what you're really focused on is rotation here within the euro. 1670 to 1720 being the bottom, right? And then up to above 120 the figure at the top. So those spots in mind, all we're working is this bottom edge. And this is what the market is doing at bottom edge. At bottom edge of this wide couple month long trading range, this is what the market is doing. That it's buyers are stepping in at that level. So again, good thing to keep focus on. What I wrote last night in my Sunday night analysis was this level on top. You have to look at this 1790 area. Any failure to take this out from the buyers, and it doesn't mean on a Monday you have to take it out inside of minutes or hours, but the idea is that on a challenge of this area, if the buyers fail to regain that level, you're very likely to see another test of this bottom edge and potentially a break. So this level on top, not 1750, not 1755, this 1790 area becomes pretty key. So that's what I would be focused on as you get into Tuesday. I would watch that 1775, 1790 area in euro and take that as a guide. Dollar yen has been unbelievably strong since the September 11th bottom. I guess it was the weekend, so maybe the September 8th, that Friday. It was the South Florida hurricane. It was that Sunday night the market gapped higher and has continued to trade higher. Well, all of a sudden, dollar yen, this is dollar yen, all of a sudden dollar yen has failed to be able to sustain those new gains. It hasn't come off, right? So here, let me just back up a little. Here's dollar yen on a daily chart. Here's the September 8th bottom that I was just referring to. The market has done nothing but increase since then. The problem is, for dollar yen, since late September, it hasn't been able to make new highs and sustain those highs. So now the sell side's getting some, let's say, not upper hand, but certainly holding this top edge. What I've been focused on is another test of the 114 top edge, and it hasn't developed. So on a shorter term basis, what you're looking for is any type of reaction into this top edge that is unable to sustain it, and I would be looking at that more for a short dollar, long yen position. So until buyers are able to firmly get above 113.20, I think you can lean against that area. And again, that looks more at the idea in the shorter term of dollar weakness. And we saw the dollar kind of maxed out, at least in the shorter term, on Friday morning, right around non-farm payrolls, and just some weaker type of dollar action just in the last couple trading sessions. So this level, this 113 area on top, 1320, that's what I'd be focused on. If buyers are unable to withstand that, the first key is going to be a break of 1220, 1230 on the bottom. So that's what would be my focus coming into Tuesday. Again, a slower Monday, it's okay. Ranges have really held and not a lot of excitement, not a lot of volatility within that. So for Monday, October 9th, it's Mark Coe. I hope you guys have a great week, and we'll talk to you tomorrow. Cheers.